The Energy Talk.
Hello and welcome to the Energy Talk podcast. My name is Olubunmi Olajide and thank you for joining us again this week. On this episode, we're speaking with Pete Joubert, who is the Chief Investment Officer for CrossBoundary Energy. CrossBoundary Energy is Africa's leading supplier of cheaper, cleaner electricity for businesses. And on this session, we're going to be speaking about their investment methodology and how they handle relationships with the different stakeholder groups that they encounter throughout their business. Pete had a very different, a very unique background to getting involved with CrossBoundary, as you hear in this episode. And we actually did do an episode of CrossBoundary Energy Access, which is another part of the CrossBoundary group, featuring Humphrey talking about how they're looking at investment into mini grids. So what I'm going to do is I'm going to put this together in a playlist because I highly recommend you listen to that second episode as well, because I think this is a good high-level overview, and in that one we go into a lot more details about the mini grid business. So I really hope you enjoyed this one. I had a great time speaking with Pete and excited to share it with you now. Enjoy.
I joined CrossBoundary as a company in 2013, coming out of investment banking in Australia, but had actually grown up in Africa and always had an interest in returning to Africa to work here. And when I joined CrossBoundary in 2013, that was actually before we had started working in the energy sector. Our shift to the energy sector was, I wouldn't say accidental, but it was certainly driven by the on-ground experience that we had at the time, which was more working in investment advisory and sort of fundraising support with African businesses. And something that we saw when working with companies across the continent was a very clear series of issues which typically make doing business quite difficult. One is a lack of access to finance, and then the second is a lack of access to either affordable or reliable power. Given CrossBoundary's experience at the time in working with investors, we effectively saw an underserved market or a gap there that we might be able to address by setting up an energy business to using our sort of access to capital and the investor base that we knew to be able to then finance and own renewable energy projects that could deliver cleaner and cheaper power to African businesses, whilst saving them the need to raise that funding themselves or use their own cash to invest in those projects. So, we started doing that and looking into that opportunity in 2014. And at that point, I moved from South Sudan, where I was based, to Nairobi as we set up CrossBoundary Energy Fund 1.
That sounds interesting. And what were the early days like? How was it setting up and getting the first few partners and raising the first fund? What were the interesting stories that came out of that period?
It was pretty tricky. It was interesting. I think we were probably a couple of years too early to that opportunity. I remember, very clearly being at a conference in Nairobi in early 2014 where, there was this huge amount of growth in the solar home system space and a lot of utility scale renewable energy projects going on, but very, very little talk about the commercial and industrial sector and small scale distributed renewable projects. So at that time, we spoke with developers and we spoke with EPC contractors in various countries and effectively believed that there was a pipeline of projects that required funding. And so went out and raised a pilot fund of $9 million of equity in 2015 to fund that pipeline and that need. But in 2016, I think quite quickly realized that the partners we were working with didn't have a ton of experience in selling power purchase agreement solutions to the corporate sector. So to be fair, neither did we, but we realized that we had to dive into it and figure it out. So from 2016 through to 2018, 19, there were a lot of lessons learned and ultimately we became a developer through that process as well. Unfortunately, as we got closer to where we are today, we've also been able to ride, I think, the dual benefits of decreasing equipment prices, particularly PV modules, but with batteries catching up as well. And then I think additionally, the increased focus and awareness globally of the need to promote sustainability and shift towards a cleaner future. So I think we may have been a bit early to start with, and we certainly learned a lot of lessons on the way, but it's a very exciting sort of area that we're at today.
Yeah, definitely. And I'm actually curious because although you were early then, I think now it's kind of getting towards the apex of the interest in the sector, especially. How did you guys refine your model? And I know that you had to go through the various stages from advisory to being directly involved with investing in projects and then deciding that being developers yourselves was the right approach and the aggregation model that CrossBoundary Energy Access now employs. So what were the steps that really were the most important to create that model and to solidify the approach that CrossBoundary Energy takes now?
Yeah, I think we've got a bit of a blueprint, I guess, when we look at investment management as we've figured it out over the years and ultimately, as I said, shifted more towards being an operating company or a developer as well. I think the starting point was we always came from what we knew our strength would be, which was sourcing and accessing capital. That's very, very core to the CrossBoundary group and part of our mission and our DNA. So we always start with, is there a way that we can access capital that may not have been done before? And then in order to deploy that capital effectively to meet the market need, what role do we need to play? Is there an existing ecosystem that we can support? So with CrossBoundary Energy, for instance, I think, as I said, the developer and EPC landscape at the time didn't have, I think, a working already knowledge of power purchase agreements in an African context with businesses. So we felt the need to build some capability and experience doing that directly. With CrossBoundary Energy Access, our mini-grid fund, I think that was a slightly different example where there was a very healthy and active ecosystem of mini-grid developers across the continent, but we could just see that they were using corporate capital to own long-term project finance assets. We saw a bit of a gap or an opportunity there to come in and provide them with the long-term project finance funding that they needed in order to operate more effectively. And so with CBA, we operate more as a fund. With CBE, we've effectively become an investor and developer.
Turning this into a product and selling it as a service, was that something that was difficult to get partners initially? And how did that scale?
Yeah, absolutely. I think the challenge we really faced early on is that African businesses, as they are everywhere, or global business today, is very price sensitive. I think particularly the commercial and industrial sector that we tend to work with the most has been under huge pressure from, for instance, cheaper manufacturing and processing in Asia. The number one question is always, if you're providing me energy as a service, what's the price? What's the saving and is that worth my time and commitment? That was much, much harder to achieve in a meaningful way in 2015, 2016, because our costs were so much higher in terms of the equipment and plant. Fortunately, global adoption of renewables and scaling up in manufacturing has changed so much in the last 5 or 6 years that those costs have now come down by 60, 70%, allowing us to pass on corresponding reductions to customers in terms of the cost of energy. Some of the early adopters that we worked with, some of the big multinationals like Unilever and others, they did have very clear carbon targets even back in 2015, 2016. So for them, it was that dual purpose need of sustainability and cost saving. But in general, I would say you really have to have a compelling value proposition to have an effective product.
That's interesting. And I'm actually curious about when it comes to working with different stakeholders. And I think specifically, first, I think we're going to start with governments. Was that a very tricky situation? I know that different countries probably have different policies and make it easier or harder to do the work you're doing. So how was that navigating initially? Have those relationships grown to a state where you see lots of value in having government as stakeholders, or is it more of a hassle, I guess?
Right. No, I think absolutely the former. Our approach has always been to be very upfront and engaged with all government stakeholders. So, from your regulators, your utilities, the energy ministries, we try to be pretty upfront about what we're trying to do and how we would seek to collaborate with or comply with government requirements. When we started out, we were often operating in much more of a gray zone because the legacy legislation and regulations in most African markets are coming from a sort of monopolistic approach, whereby the government is typically the sole supplier and distributor of electricity. Within the last few years, distributed generation, mini grids, solar home systems have started to really take off. Many regulators have now looked to update that legislation and those regulations. And correspondingly, we're certainly engaging, I think, even more frequently now, whereby, for instance, in Rwanda, we've recently been consulted by the sort of drafting consultant for their new distributed regulations to say what comments would we have and do we see any issues with what they're proposing. Yeah, our approach is absolutely we need to be able to support with and work with the government, being the regulator, the utility and the grid, because without them, our projects typically can't function and neither can our customers. Ultimately, we have to coexist and support each other going forward.
Something else that's quite interesting was, I think traditionally when it comes to the space that you're working in, like specifically for renewable energy, there's been this perception that it's usually just grants or like foreign, like large charitable financial institutions that put in money with this. And I know that right now CrossBoundary has a wide range of partners when it comes to raising money and deploying them in different projects. The Rockefeller Foundation is one that is like one of the big ones that you're working with projects right now. And was that something that was especially difficult to navigate, and how is it to come into that space right now as a private company?
I guess the legacy lens that we figured out over the years is that if you look at most developed markets, the way that most national grids and electricity infrastructure has been built out over time was effectively with government subsidy. If you look at very large distributed grids, like say in the US, many rural communities there would never have been economically viable to supply power, nor the companies in those areas as well, or particularly if you look at agriculture, it's a good example. I think in an African context, what we've found is that fortunately there is a very active donor and sort of, philanthropic community out there, which is looking to try and find innovative ways to bring better energy access and cheaper energy access across the African continent and the developing world globally, rather than going with cap in hand to governments and asking them to try and subsidize or support, the development of new business models. There is a willing philanthropic sector there able to do that. And I think what we've tried to do is where that funding as concessional funding or sort of, funding that provides leverage or support for commercial sector or private sector funding, where that is available and where it's needed, we seek to use it. But to come to CrossBoundary Energy as an example, our first fund had a blended finance contribution from USAID's Power Africa initiative. But having shifted now and demonstrated that pilot fund and the viability of the business model, our second set of funding that we closed last year is now fully commercial capital. So the hope is to never end up in a position of reliance on that. You can't have a business model that can only work with concessional funding, or shouldn't. But that funding can often be required to get a new business model off the ground and up and running.
And that's interesting, because I'm wondering now, how much of the business model has been de-risked to the level where you can confidently say that? What are the indicators that you should have?
Yeah, I think the key thing is you're kind of looking at two sides to the same equation. One is probably your input costs coming down with scale. And as I said, I think the renewable energy sector as a whole, that benefit has been huge over the last 5 or 6 years. Our input costs, for solar modules and batteries and inverters and everything 5 or 6 years ago were significantly higher than they are today. The other side of the equation is investor returns. On the one hand, you've got the inputs to the business model, and then you've got the outputs being returns back to your funders. And inherently, the earlier stage or the higher risk business model is, the higher the required return. So what we often see is quite early on, if what you're doing, be it mini grids, be it commercial solar, is not at scale or is still quite early stage, you get hit on both sides of that problem. But as the business model scales and builds, either globally or regionally, costs come down, as do investor returns. And with that, you can start to phase out or wean off any concessional funding that was first needed.
And I'm actually curious, because I want to get from your perspective as well, like just considering like CrossBoundary Energies and just the entire portfolio, how much generation capacity do you actually have to get to be like, okay, maybe you're bridging towards the territory of what a traditional utility would technically be?
I would say, so with CrossBoundary Energy, for instance, when we started out, I think this is a really curious fact of the investment world and funding in general, is it can sometimes be more difficult to raise small amounts of funding than large amounts of funding. So our pilot fund for CrossBoundary Energy was $9 million of equity of which we had 1.3 million of concessional funding from USAID. And that's pretty tricky to raise because you can't access any of the development finance institutions or large private equity firms because the deal size is too small. Whereas last year we closed a $40 million equity commitment from a single private equity investor, Arch Africa Renewable Power Fund. And we're currently in discussions with another investor with, again, double-digit millions as an equity top-up to that. So to answer the question, I think where you start to clear some of those hurdles of minimum investment sizes and access a broader, deeper pool of funding is probably at the sort of, $20 million plus mark. I think anything below that can be tricky and often directs you back towards, potentially foundations or smaller impact investors.
And right now you've been at the firm for quite a long time. And with the position you have now, how do you see the outlook? And what are the projects that have really, really gotten you excited once you've seen them deployed and seen the deals go through?
Yeah, I think the outlook from where we are today is very exciting. I think, as you said earlier, the distributed energy sector really feels like it's hitting its stride at the moment. And I think across Africa, we're going to see exponential growth in years to come. With CrossBoundary Energy, our portfolio of projects that we own or are delivering is currently sort of $90 million across 7 countries. And I don't really know where it's going to be in 5 years' time, but it's going to be bigger numbers than that for sure. What we have seen, which is very interesting, is in other emerging markets, distributed energy has really grown exponentially. I saw the other day that Brazil now has, I think, 6 gigawatts worth of distributed energy installed. And 5 or 6 years ago, that was a few hundred megawatts. So the opportunity ahead is enormous. And I think given what we've seen over the last 18 months as well, with, I think, continuing focus and attention shifting towards climate change as an issue, we're really in the right space at exactly the right time to be able to try and help tackle that problem. And in doing so, shift the commercial and industrial sector to cleaner and cheaper power.
And with all the progress that we've made so far, what would you still describe as the key challenges with the work you're doing right now?
I think the biggest challenges that we face at the moment, delivering, and we've always had a focus of being able to work on a Pan-African basis. And there's a lot of growth and learning, I think, still to come in these sectors, the distributed energy sector generally across Africa. So I think that the biggest challenge is trying to work with as many countries as you can, and obviously, corresponding numbers of stakeholders to basically help educate and improve and move forward as quickly as is safely possible to do so. If you look at markets like India, I think India had a centralized renewable energy program which enabled very, very quick adoption and scaling of distributed renewables across the country. Africa, is obviously just much more challenging given that you're dealing with many countries who have different legacy systems or different viewpoints. So you do tend to face the same problems in different countries at different times. But I think our hope is to obviously keep up the engagement that we have, support the stakeholders that we work with as best we can, with the ultimate goal of bringing the continent towards a much better place within the next 5 to 10 years.
And I guess I want to end this more on the personal note for you. And so your early career and what you're doing right now probably are a lot different, and you're a lot closer to the projects that you're sourcing deals for. And how does it feel to be in this space right now? And is it something that you are excited about, a specific thing, or is it a series of things that you are looking forward to and you're hoping happens for the next 5 years while you're at CrossBoundary?
No, it's incredibly exciting. And I think a funny personal point that I always look back on is that when CrossBoundary's partners originally asked me if I'd be interested in shifting over and working full-time on sort of feasibility for CrossBoundary Energy, initially I had a bit of reluctance about that because I come from a more generalist finance background where I really enjoyed exposure to different sectors and different problems. But I think what I quickly realized and certainly now know is that our generation is just a crucial turning point within history. I think the energy sector is one of the few sectors at the moment that is undergoing a complete overhaul and transformation from where we were 100 years ago to where we'll be in 100 years' time. So, being able to be a part of that, and I think, one day chatting to my kids or grandkids, being able to say that I've played a role in that is something I'm incredibly excited about. And yeah, I just can't wait to see where we end up.
Well said, Pete. That was amazing. So thanks for joining me for the episode, and I really appreciate speaking with you.
Thanks for listening to the Energy Talk podcast. You can find us on all podcast listening platforms. Just search for the Energy Talk. Send us an email to @energytalkpodcast@gmail.com.